Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review and AI trading review of silver after last week's huge correction. Silver got stopped out here at 113. The last AI generated volatility trade got stopped out there. We also had an Ichimoku cloud chart sell signal at the top end of the cloud here. The downside target was then the top end and the bottom end of the cloud, sliced right through those levels. Slice right through that cloud chart support zone, slice through this bottom end cloud chart support zone, and then the rally, the correction lasted up until this cluster of Ichimoku cloud chart support levels. We're going to look at in a minute where the other two levels come from. So this was this January low here at the bottom end of the cloud as a support zone. Did get a potential rebound there, volatility breakout trade there, and then another test of this zone here, these bottom end cloud chart support levels. Now, technically speaking, we could see a retracement up until about this $90 level, and then the bottom end of the cloud if support comes back in at the market. But now silver is bearish. Price action below the cloud is bearish from an Ichimoku cloud chart perspective. To be bullish on silver, we need to be back above the top end of the cloud. So there's some retracement relief rally trades below the cloud available, but do remember it is the overall chart is still bearish. Taking a look at the monthly Ichimoku, you can see that huge parabolic move to the upside. Invariably long price action moves to the upside are generally met with a bit of a correction. This correction lasted up until the top end and bottom end of the front end of the Ichimoku cloud. You can see how the standard line of the Ichimoku cloud there on the monthly chart is a significant support zone. So keep in mind that zone is quite a significant support zone. But we're still quite extended from the top end of the cloud. We look at the distance between the price action here and the top end Ichimoku cloud level. Taking a look at the weekly Ichimoku, these levels here we get from the monthly Ichimoku cloud. You can see the standard line rebound there on the monthly Ichimoku, and also now we're back above the standard line on the weekly Ichimoku cloud, with the top end of the front end of the cloud as another key support or resistance zone. Depends if we're going to trade back above that zone. If we don't trade back above $84, then we could see some further downside to retest these levels if that front end cloud chart resistance comes back into play. But a much needed consolidation after becoming very extended from the top end of the cloud. Vertical price move like that with very wide price swings at the top end of the chart normally signals the kind of climatic rally that you look for a stock, and that's kind of the way to sell out into those big rallies when it gets too far extended from the top end of the cloud. On the daily, we can see the huge extended price action away from the cloud. Then we got our correction back down to potentially rebound from the top end of the front end cloud chart support. In this case, we rebounded from 4-hour and daily and weekly and monthly Ichimoku cloud chart support levels. Key levels to watch out for on the daily is that front end cloud chart support zone. We need to be back above that level for this retracement trade to take place. So watching very closely to see if that bottom end of the front end of the cloud, this 83 zone, is going to become new resistance or a new support zone for a swing trade back up. The other levels to watch out for is the bottom end of the front end of the cloud. So we've got this cloud chart support zone there. You can see that came into play. The bottom end, the front end of the cloud there, that zone there, as well as significant downside risk to this zone here. So 64. So we can quite easily get back down to 64. But price action still okay. We're above the top end of the cloud, so it's still bullish on the daily. The 4-hour is bearish, unfortunately, so there's retracement relief rallies possible back up to the bottom end of the cloud, but we need to be back above $84 there. Keep an eye on that zone there as well, 83, 84. So we need to get back above that level because that's a critical support zone on the daily Ichimoku cloud. But it's been a great trade using artificial intelligence, volatility breakout trade. It was vital to keep those trailing stops in place at 113. Got you out of the big drop. Now we're looking for a technical rebound retracement trade of this aggressive sell-off, and keep an eye out on those key support and resistance levels on the daily at the bottom end of the front end of the cloud as critical swing trade rebound zones. Until next time, happy cloud chart and AI trading. Bye for now.